this chart we have here on the screens, it essentially shows you top panel is the monthly exports in U.S. dollars from China to the U.S. The bottom, we have the import numbers as well. And I think just as a visual, you see the imbalance here of trade. The reason I bring this up, we have midterms coming up in the U.S. You understand why this is a political issue. Can I assume then that between now and then, this hard line stance between the two, especially from Donald Trump, doesn't really go away?
I do think that tariffs, protectionism, trade in general are a political issue in the United States that investors need to be paying attention to. But I think coming up on the midterm elections, the rhetoric around this issue will grow only more heated. I don't think midterms are going to, as many have been saying, cause a cool down in the rhetoric. There's not going to be a hasty resolution from the U.S. government ahead of the midterm elections, simply because tariffs are a potent political issue in the U.S. And being able to position oneself as strong on China actually may give some politicians in the midterm elections a bit of an advantage.
And as far as what this means for the Fed, tariff-induced inflation, I would imagine, shows up in inflation numbers at some point soon, and imagine it shows up quite clearly. How do markets approach it when that time comes? I mean, should we expect the Fed to become hawkish then, or dovish equally?
So I think the Fed will definitely respond to any spike in inflation, and whether that means a cool down or a bit of a more measured guidance on how they direct investors to think about future rate hikes. However, for there to be an actual inflation spike to the level the Fed would take it into consideration, it's a pretty high bar. And that's going to take a lot more tariffs than we've seen either proposed or in place for inflation numbers in the U.S. to start pricing those in to a significant degree. There may be a modest rise from what we've seen so far, but not a spike.